Hello, I'm Sebastian. Welcome to Nine Natries podcast. Today, I will summarize and review the book, The Intelligent Investor, Reverend Ed, the definitive book on value. Investing, penned by the esteemed Benjamin Graham, stands as an unequivocal cornerstone in the realm of finance and investing literature. First published in 1949 and continuously updated to keep pace with the evolving financial landscape, this edition brings forth Graham's timeless wisdom in the context of today's market challenges. Revered by many as the Bible of value investing, the book is built on the foundational principle of purchasing undervalued assets to ensure a margin of safety. It painstakingly details the philosophy of value investing, a strategy employed by Graham himself and later by disciples such as Warren Buffett. Through this work, Graham endeavors to equip the ordinary investor with the tools and mindset needed to achieve long-term financial success without falling victim to the irrational market forces. I will give you key takeaways from this book. Firstly, the concept of value investing. At the heart of The Intelligent Investor lies the concept of value investing, a strategy that involves picking stocks that appear to be trading for less than their intrinsic or book value. Graham's primary assertion is that in the long run, the stock market tends to reflect the intrinsic value of companies. However, in the short term, prices could fluctuate widely due to investor sentiments, market trends, or other external factors. Value investing is about seeking out these discrepancies, where the market price of a stock is less than its underlying worth. Graham points out the importance of thorough analysis and understanding of a company's financial statements to discern its true value. This approach stands in marked contrast to speculative investing, where decisions are often based on market trends or hearsay rather than substantial financial evidence. Graham's methodology encourages investors to focus on long-term growth and dividends, emphasizing the principle of buying with a margin of safety that protects them from significant losses in volatile times. Secondly, the margin of safety. A pivotal concept from Graham's The Intelligent Investor is the margin of safety, the principle of investing at a significant discount to intrinsic value to minimize the risk of loss. This concept is the practical application of value investing. By only buying securities when the market price is significantly below its intrinsic value, an investor establishes a buffer against errors in analysis or unforeseen market downturns. Graham illustrates that the margin of safety acts as a protective cushion that helps protect the investor from the vagaries of the market or mistakes in valuation. The bigger the margin, the greater the safety net for this investor. However, Graham also cautions against assuming that a significant margin of safety is always sufficient to guarantee a successful investment, emphasizing the need for diligent research and disciplined investment strategy. The margin of safety concept underlines the difference between investing and speculating, urging investors to focus on long-term security over short-term gain, and to make decisions based on sound financial analysis rather than market trends or emotions. Thirdly, Mr. Market metaphor, one of the most enduring illustrations Benjamin Graham introduced in The Intelligent Investor, is the metaphor of Mr. Market, a hypothetical investor who offers daily price quotes on stocks to our protagonist investor. Mr. Market's mood swings wildly. Some days he's euphoric and willing to pay high prices for stocks, while on other days he's despondent and willing to sell at rock-bottom prices. The critical lesson from this allegory is that the investor should not be swayed by Mr. Market's temperamental offers, but should instead focus on the underlying value of investments. The metaphor serves to personify the market's irrationality and volatility, emphasizing that prices in the short term can be driven by sentiment rather than fundamentals. Graham encourages investors to view these mood swings as opportunities rather than threats. When Mr. Market is in a state of panic, it might present a chance to buy undervalued securities. When he is overly optimistic, it could be an opportunity to sell overvalued securities. The key takeaway is to maintain an objective stance, using Mr. Market's behavior to your advantage without being influenced by his irrationality. Fourthly, portfolio management and diversification. Graham dedicates a significant portion of The Intelligent Investor to the nuts and bolts of portfolio management and the critical role of diversification. He argues that no matter how much research an investor does, or how certain they are of a stock's intrinsic value, there is always an element of unpredictability in investing. To mitigate this inherent risk, Graham champions the cause of diversification, spreading investments across a broad spectrum of securities to reduce exposure to any single asset's potential downturn. Diversification is not just about owning multiple stocks, but also about varying types of investments, including bonds, securities, and possibly real estate, to protect against different forms of market volatility. Graham suggests that investors adopt a disciplined approach to portfolio construction, emphasizing the importance of balancing between aggressive stocks for growth potential and defensive stocks for stability and dividends. This judicious mix helps in buffering the portfolio against market fluctuations and safeguarding the investor's capital over the long term. Lastly, the defensive investor versus the enterprising investor. Graham introduces two distinct types of investors in The Intelligent Investor: the defensive investor and the enterprising investor. The defensive investor seeks safety and a reasonable return with minimal effort and risk. Graham advises them to focus on high-quality bonds and index funds, recommending a conservative approach to investing that involves regular, disciplined investment in a diversified portfolio of stocks and bonds, adhering to a predetermined allocation strategy to ensure long-term financial security. On the other hand, the enterprising investor is willing to dedicate more time and effort into finding undervalued stocks or growth opportunities that require active management. This type includes individuals who analyze financial statements, follow market trends, and seek to outperform the market by identifying undervalued securities. Graham cautions that this approach has a higher risk and requires a greater degree of market savvy and dedication. For both types, however, he underscores the importance of adhering to the principles of value investing, including seeking a margin of safety and making rational, informed decisions free from emotional influence. In conclusion, The Intelligent Investor, Reverend Ed, The Definitive Book on Value Investing, by Benjamin Graham, is an essential read for anyone looking to navigate the often turbulent waters of the stock market with grace and profitability. Its teachings are timeless, offering valuable insights not just for the seasoned investor, but also for novices looking to embark on their investing journey. The principles of value investing, emphasizing due diligence, rationality, and patience, serve as a beacon for achieving long-term financial stability and growth. Graham's nuanced understanding of the market, illustrated through concepts like the margin of safety and the Mr. Market metaphor, equips readers with the mental framework to make informed investment choices. Whether you're a defensive investor aiming for steady growth with minimal risk, or an enterprising investor seeking to actively manage and grow your portfolio, Graham's advice is universally applicable. Incorporating his strategies can lead to a more grounded approach to investing, based on principles that prioritize long-term value over short-term gains. In a world rife with speculative ventures and volatile markets, The Intelligent Investor remains a guiding light, promising a path to financial security and success for those willing to learn and apply its lessons. If you would like to support Benjamin Graham, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.